Wealthsimple Trade has become one of the most popular investing platforms in Canada. It's simple, it's mobile first, and it lets you buy stocks and ETFs with zero commission fees. But if you're trusting it with your savings, with money you worked for, the real question is straightforward. Is your money actually safe here? And the answer is a little more layered than you might think. Let's start with how Wealthsimple Trade is structured. Wealthsimple itself is a technology company. It's not the entity that actually holds your investments. When you buy stocks or ETFs on Wealthsimple Trade, the assets are held through a regulated custodial broker, specifically Wealthsimple Investments Incorporated, which is a member of the Canadian Investment Regulatory Organization, and is protected under the Canadian Investor Protection Fund, also known as CIPF. This is important because it means your investments don't simply sit inside Wealthsimple as a company. They are held by a regulated financial custodian under rules designed to separate your assets from the company's operating funds. So what does that protection actually mean? If Wealthsimple, as a company, were to go out of business tomorrow, if the app shut down, if the brand disappeared, your investments don't disappear with it. Your stocks, your ETFs, your TFSA and RRSP holdings would be fully transferable to another brokerage. CIPF protection means that in the extremely unlikely case that a custodian fails and client assets can't be accounted for, you're covered for up to $1 million per account type. That includes your personal investment account, your TFSA, and your RRSP individually. It's one of the strongest investor protections in Canada. But we need to be careful here. When people ask, is Wealthsimple safe? They're usually asking two different questions. One, what happens if the company fails? The answer is, your long-term investments are protected, regulated, and transferable. That part is safe. The second question is, what about risk? And this is where the nuance matters. Wealthsimple offers two different types of trading. Wealthsimple Trade for stocks and ETFs, and Wealthsimple Crypto for digital assets. These are not protected the same way. The stocks and ETFs you hold on Wealthsimple Trade are covered under CIPF because they are regulated securities held by a licensed investment dealer. But crypto assets on Wealthsimple Crypto are not covered by CIPF. They are held in custodial arrangements that are considered separate from traditional brokerage protection. So if you hold Bitcoin or Ethereum on Wealthsimple Crypto, the custodial and counterparty risks are higher. This isn't unique to Wealthsimple. It's the nature of crypto regulation in Canada, but it's a distinction you need to understand. Now, there's another layer. Wealthsimple Trade is designed for long-term investing, not active day trading. There are limitations. No advanced charting tools, no multi-leg options trading, no complex order routing. If you're buying broad market ETFs or stable companies and holding them over time, the platform is intuitive and cost efficient. But if you're trying to flip stocks throughout the day, execute precise limit strategies, or actively trade volatile securities, platforms like Questrade or interactive brokers are better suited. So safe also depends on how you intend to use the platform. If your strategy is long-term, diversified, low-cost investing, Wealthsimple Trade is safe, regulated, and built to support exactly that behavior. If your strategy is high-frequency speculation, the platform isn't unsafe. It's simply not designed for that use case. So here's the clearest possible answer. If you're holding stocks and ETFs on Wealthsimple Trade in a TFSA, RRSP, or taxable account, your investments are safe. They are backed by regulated custodians, protected under CIPF up to $1 million per account type, and transferable even if the company disappears. The platform is built to be beginner-friendly, and for most new or intermediate investors, it does its job exceptionally well. If you're holding crypto on Wealthsimple Crypto, the protection is different. It's not CIPF covered. Your exposure depends entirely on the crypto market, the custodian, and your tolerance for digital asset risk. That doesn't mean you shouldn't hold crypto. It simply means you need to understand the difference between a regulated security and a speculative digital asset. In the end, the real takeaway is this. Investing always carries risk, but the platform you use should not be one of those risks. Wealthsimple Trade is safe for long-term investing in regulated securities. If your strategy is stable, diversified, and patient, the platform works. If your strategy is speculative and speed-based, you'll want more advanced tools. The key is alignment. Your platform should match your investing behavior, not define it. So yes, Wealthsimple Trade is safe. The real question is whether your investing approach is.